Good afternoon, everyone. In this first panel, we will look at the big picture that talk about the economic and capital market development, both global and regional. As we speak today, the world continues to face turbulence. Many have been talking about the sea change of a century for the global economy, higher for longer interest rates, continued geopolitical tension, global trade fragmentation, rising unilateralism, supply chain disruptions, and onshoring, reshoring, backshoring, whatever you name it. Here in Asia, there are both risks and opportunities, and amid this once-in-a-century change, Asia-Pacific jurisdictions are very much in the epicenter of all of this. Now, the macro backdrop is challenging, but the Asian growth story is compelling. More fundamentally, the bulk of Asian nations has young demographies and expanding working class population, which supports consumption and investment growth. Asian economies have weathered the shocks from the pandemic and the interest rate hikes quite well. Financial markets very resilient. Interest rates in the region did not go down to zero, and in most cases, were raised and lowered earlier than the US counterparts. So this is evident in the post-pandemic economic rebound. Asian capital markets have come of age, propelled by capital and wealth creation. The rising middle class and technology boom helped channel domestic savings into investment, drives fast growth, high value-add industries, and boost stock market performance. Liquidity and increased foreign and domestic and retail participation are driving corporate earnings higher, and stock markets supporting the real economy. So this is a virtuous circle at play across the region. Asia's more mature markets are topping regional and global league tables, while the developing ones are showing a lot of promise. So let us put this in perspective in numbers. In terms of GDP, 3 of the world's top 5 largest economies are in Asia: China, Japan, and India. China, Japan, India, and Hong Kong occupy 4 out of the top 5 positions in the global league table by market cap, followed by stellar performances of more than 20% or more in Japan, and also in India's stock market last year. In terms of IPO fundraising, stock exchanges in Shanghai, Shenzhen, India, Hong Kong, Tokyo, Indonesia, Korea raised a combined $70 billion US dollar last year, 60% of last year's total. Local currency bond issuance of ASEAN +3 during the first 3 quarters of 23 amounted to US dollar 8.6 trillion, exceeding the issuance in US. In 2023, Asia-Pacific region remained a dominant source of global capital, with Singapore, Hong Kong, Japan among the top 5 and accounting for nearly 40% of the total cross-border capital flows. So you see what I'm driving at. Regional economies across Asia and financial markets are powering growth of the global capital markets, channeling savings and investments within the region and across to Europe and US. The opportunities are there, but the challenges as well. The world has shifted from unipolarity to the multipolarity, especially in terms of economic power. Asia, for one, is fast and interconnected, involving interests in diverse players, and is made for multipolarity, and has practiced multipolarity for decades. As some would say, the region is too big and diverse to be dominated by one single power. The multipolar world thesis are driving investment in interconnectedness of these markets for decades. Just then, Vice Chair Fang talked about close collaboration between Hong Kong and China capital market. In fact, the last few days, we talked about meaningful and close collaboration among the Asian markets and with Europe, play an important role, particularly in meeting a number of shared priorities to make the region's financial market more resilient, bigger, stronger. And these include broadening, deepening, and further liberalizing the capital markets in the region, strengthening financial regulation to safeguard financial resilience and investor interests, and diversifying the investor base and promoting intra-regional and cross-border investments, embracing financial innovation, and mobilizing transition finance to meet the net zero goal. Collectively, Asian markets can become beneficiaries in a world of more managed globalization, technological revolution, and sustainable development. This panel will focus on the rise of the Asian capital market, the why and the how, and what comes next in the region's capital market. So let me kick off the discussion with a question for Kevin. To set the scene, Kevin, can you, let's survey the global and Asian capital market. I understand you have examined a lot of data, I was told, and about capital market resilience and liquidity across Asia, and particularly Hong Kong and China. So can you tell us some of the forces driving the capital markets and what are the major factors of outperformance and some advice for